Hello, this is Mike Swanson of WallStreetWindow.com. I've got a very special guest today. I'm speaking with Matt Morris, who runs the website microcapmillionaires.com. How you doing today, Matt?
I'm doing great. Thanks, Mike.
Well, thanks for coming and talking to me and my listeners. It's been at least 6 months since we last did a public interview, although we do talk quite often in private. But, over this year, of course, in January, we saw the stock market run straight up and pull back about 10% on the Dow, but now we're kind of going sideways. The past 10 days or so, we've dipped, and the TV's talking about Trump and tariffs and Trump and tariffs. But things have stabilized a little bit today. So how do you, is this changing your outlook on the market or what type of trading people should be doing?
Well, yes and no. I mean, there's certain sectors that are continuing to do well, even in the face of what seems to be kind of the end of Q2 kind of jitters in the market and fears of a trade war, stuff like that. For example, one of the good sectors is the oil service stocks. So I was looking at a couple of those. Actually, just got into a little cheap oil service stock this morning, and the weed stocks are, some of the Canadian, I call them weed stocks, they're cannabis, whatever. It's a more proper name, I suppose. But they're pretty interesting plays here as we go into the second half of the year. They've kind of been just kind of bumping along and going sideways for several months now. So I think they're setting up as a good play towards the end of the year. And, I know some people may be a little bit sick of hearing about those stocks, but they really do have a good runway for growth. And I think there's definitely still opportunities for right now. It's going to be a good second half of the year, I think.
Well, I kind of have come to the opinion that it's getting tougher, I think, to just trade the S&P 500 with that ETF, and because the market just seems to be going up and down, and I think it's actually better for people to do individual stocks. And I'm shorting some stocks but going long some stocks, but I know you are really good at doing more trading of individual stocks than just the market averages themselves, particularly in the more smaller cap arena. So what besides the weed stocks, what kind of things you see happening?
Oh, yeah. So, you're exactly right. It is a lot of chop right now in the major ETFs like SPY, DIA for the Dow Jones, and the QQQ, for the NASDAQ. I'll probably break out of that range here before too long. I think probably the upside. But anyways, to your point, yeah, I totally agree. Finding the individual opportunities in these stocks, and I trade a lot of stuff, but my first love has always been penny stocks. That's what drew me into the stock market. May have never even gotten involved in it if it hadn't been for me finding out about penny stocks and seeing how they could go from 50 cents or even $5, and maybe 5x or 10x over a short period of time. So the way I've kind of broken things down and made it into a way, a theory or a method or just a tactic is I like to look at things and consider them a tell, right? So like actionable information is what I mean. So if I can look at a stock and I can, the chart is part of it, but the market is really news driven, Mike, and individual stocks even more so. So like right now, the market is, it's not overheating, and it actually has a little bit of downward bias because everybody's afraid of a trade war, right? Well, in individual stocks, that news driven momentum to the upside or the downside is even more powerful. So, like for example, if a microcap stock comes out, the CEO comes out, and they're only projected to do, $5 million in revenue in the coming quarter and maybe lose 5 cents a share EPS, and they come out and say, hey, we're going to double the amount of revenue and we're going to turn a profit. We're going to do like 2 cents a share EPS. That's a huge differentiation, of what was expected. So, I've seen stocks like that go from, maybe $1.50 to $4, in like a week's time. So, it's the power of understanding how important something is as a news item, or being able to say, well, that's not really that important, So, basically looking at a piece of news and say, hey, this is significant, Or on the other hand, this is something that, hey, you just kind of need to ignore.
Well, do you see like some consistent type of trading patterns that kind of can confirm a move? Like a lot of times you can see news come out and a stock will just gap up and then sell the news. But with the smaller stocks, that sometimes doesn't happen and you can get an even more powerful second move. Do you see that a lot?
Oh yeah, so that's so it's either the gap and go or gap and drop, right? So those are definitely tough. I mean, so what you can do in a situation like that, if a stock is gapping up big and you're trying to figure out, is this going to keep going or is it going to fall after the opening bell? Is you can just usually just zoom out on a daily chart. If you go back far enough, you'll probably see 2 or 3 other scenarios where that stock either continued higher or dropped after the open. So that can give you a fairly good idea. If it's something like the trades on the Amex or if it's an OTCBB stock, then those tend to have a hard time keeping a bid, so to speak, after the open. But yeah, so the patterns though, like for example, they are something that you can use. I know one of the more well-known penny stock guys is all about if you can spot patterns, you can become a millionaire. I would say that's kind of not true. I mean, it's not that simple, It's a good marketing ploy, but it's just not true. So, anyways, there's more to it than that. That's an easy way to sell it to the public, but there's more to it than that. Just recognizing patterns. I mean, a pattern is a stock's either going sideways, it's either going up or down, right? So, I mean, there's more nuances to it than that, but what I look for is patterns of behavior based off of a news event, right? So, like one of the stocks that I just bought this morning is a cheap little oil service play. It's actually a company it's really kind of a bad company. I mean, it is. They didn't do well during the oil downturn. But the thing is that I'll just tell you, it's Seadrill. So I just bought a small speculative position in Seadrill, SDRL. And the reason I bought that is not because it's a good company. The reason I bought it is because they're unwinding the company soon and they're going to reorganize the company. And so the shareholders of the common stock basically get, a small, very small fraction of the company, right? So it's not a value play. It's not a good investment, quote unquote. But what can happen, the dynamic of the share structure is such as when a stock is going to be delisted like this one and reorganized to a new stock, kind of like GM did when they filed bankruptcy and then they issued new GM stock, right? Mm-hmm. So what the dynamic that unfolds is that the short sellers, if people have a short position, or have to cover before that stock ends trading. Before that stock can finish up all the short positions from, the brokers will tell these guys that are short, say, hey, look, you got to close this out. We're getting ready to delist the stock. Or what they will do is they will close it out for them, right? Which basically usually happens is a margin call, and they'll liquidate the short position. They'll do a market buy order and get everybody that has a short position out. So the reason I'm interested in that is because I remember, I think it was 2, maybe 3 years ago, but the coal companies, when they all went bankrupt, Arch Coal, Peabody, the stocks are actually doing okay nowadays, the new stocks. But when the old stocks, when they went bankrupt and they got canceled, well, right before those stocks were actually slated to stop trading, so they had already got the Q on the end and everything, and they were getting ready to be delisted. Well, they had like huge parabolic run. I mean, you can't even pull up the chart now to see what I'm saying, unfortunately, because those tickers just don't exist anymore. The charts aren't out there anymore on stockcharts.com. But I mean, it was insane. I mean, we're talking like 5 baggers. Sometimes bigger than that. Now, the key thing to remember here is that these aren't something that you hold forever. I mean, you want to take your profits because that stock is going to be delisted. but the dynamic here. My point is that the pattern is based off of the news catalyst, right? So it's the event. I do consider, like what a candle looks like. Obviously, if it's a reversal candle, you want to be careful. Like if it's a candle where a stock gaps up a lot and then sells off the rest of the day, you probably want to hold off on getting in until it, pulls back for maybe 3 or 4 more days if you like that stock still. But my point is the patterns I look for is a pattern of, a news driven event. Do I know that? Do I know that in the past a similar stock or a different stock that had that kind of news event did a bullish pattern follow that news event more or less? So I don't know. I hope that makes sense. So it's not just like the necessarily the pattern of the chart, the candlestick type, the moving average, the RSI, things like that. It's a pattern of how a stock reacts after a certain news event transpires.
Oh no, it makes sense, and I know of the times where companies were going bankrupt, but before they did, their stocks would go down to 50 cents or 10 cents. Then they'd go to $1, kind of like you're talking about from short covering or whatever.
Yep.
And then maybe 6 months later they're at zero. But that move from 10 cents to $1 was something else. It actually happened in the town I live in. There's a textile plant that it's been a long time ago, like over 10 years ago, but
Mm-hmm.
it happened with that stock, and people were talking about it, and some people were making money trading it even. And that's one thing about your trading service too, is you don't just list people, a bunch of stocks, but you've got, entry and exit points on these positions too for people.
Right. Right. Yeah. And that's essentially what people really want. I do have to give a disclaimer. It's technically for entertainment purposes only. I'm not a registered investment advisor, and so you have to consider all that. But if someone wants to take action based on something that I mentioned, then they can do that. Obviously, it's a free country still. But yeah, so the bottom line is that the buying. So people are busy. They don't have time. I have the time to sit around and go through filings and news, press releases, things like that, earnings releases, read through 10Qs, look at insider buys, look at insider sells, things like that. And so basically I'm putting in the hours at the office for the potential trades that could, really make some good money for people. And then I just basically separate the wheat from the chaff and get things, and I find something that I like for a trade, and I'll kind of compartment and just kind of compact that into a short buy and sell type scenario where I'll send out the email and say, hey, this is the stock I like, this is the strategy, and you look for entry this range, look for exit this range. And then, of course, when the time comes to sell, I send another email about that too. And then there'll be sometimes two stocks like the cannabis stocks where I'm not, I've been in them for a long time, several months, and I'm not looking to get out this summer, even though, unless they go to the moon. But, so there are some where they're more short term and others where they're more, kind of midterm, I suppose.
Yeah, well, I don't want to keep you all day, and I think we've given people a pretty good idea of the type of stock trading that they can do and start to get involved in and move forward. So as we wrap up, could you tell people a little bit more about your trading service and how they can get started?
Well, sure. I've been kind of, I guess I've been kind of a little bit proud so far this year. It's been, and the reason being is because it's been 10 years. So it was, I guess, right around the time, not long after I opened up my service, me and you met too. And I, just emailed you, shot back, and we've been friends ever since. But January of 2008 is when I opened up my service, and man, the response, Mike, was just, it was so tremendous. It was like you figure January of 2008, what was happening? The country was really kind of going down a greased pole of economic decline in January. And it didn't bottom out until 2009. So for my service to take off from nothing, and sustain itself, not just a month or two or a year or two, but for me to be in business for 10 years is really humbling. And I suppose you could look at that and say, hey, I must have something good to offer, and so hopefully that kind of lets people know that I'm not one of these fly by night guys that just comes and set up shop and is gone the next day. So basically how it works is my service, you can join it. Mike, I think we're going to do a special offer and everything, not to let the cat out of the bag, but So we're going to do that, and I'm going to offer a nice discount for your subscribers and podcast listeners. And so basically, what they'll do is they can go to the page and get more information. There'll be, of course, a button where they can join and get a discounted offer, deep discounted offer. And once you get inside, basically, I have a members area where you can see past alerts and updates. But also, what you get as a bonus is you get a training course. So you might say, well, Matt and Mike, I've never heard about penny stocks, or I never heard about microcap stocks, or I've always heard they were something to stay away from. And I understand that. They're not for everybody, and it's for speculative money. It's not something to lump your 401k into 3 or 4 penny stocks, right? But if you're up for some speculative trading, you want to try to maybe rapidly grow a small amount of money that you can set aside. Then this is something you need to look at, because what you do when you get in the members area is that you'll see a kind of like a zero to trader kind of course, where even if you're coming straight off the street, you've never traded before, I'm going to show you where to go to get a brokerage account. I'm going to show you how to place a trade inside your brokerage account. Everything from that, the bare bones fundamentals, all the way to learning some strategy, how to read charts, and how to find stocks that have potential to go up based on certain other events that are going on in the markets and in the world. And it'll be a course that I think will be helpful, not just for newbies, but for people that have some experience as well. And then, of course, you'll get the email alerts with the buy and sells and the updates on stocks that that I'm holding, that I have as holds for a good period of time until it comes time to exit them.
No, it's really good stuff, and I recommend that people start to get involved in it and check it out for themselves and see the results. Well, thank you for talking with me and my listeners, and hopefully we'll do an interview sooner next time than we have the last one, because it's been, it might be a year already. Time goes by so fast.
Yeah, it flies. All right, Mike. Well, that sounds good, man. Look forward to it, and thanks for having me on the show.
Yeah, good talking with you.